Hey Professor Hughes, how you doing? I hope you're well. I'm super happy to be sending you this video presentation and finishing off our semester. So without further ado, I'm going to jump right in. My topic today is going to be something that we really didn't talk about that much in class, but it was on at least one PowerPoint slide, so I'm going for it. It's cost accounting, aka managerial accounting. And managerial accounting is simply the use of accounting information by managers to better inform themselves of a company's situation before they make important decisions. And the final output for a managerial accountant would be some sort of budget, be it for a segment of a business or just the entire business itself, depending on how high you are up in that business. I think it's important to note before we begin that while financial accounting is really more focused on mapping out the financial situation of a company, how many assets, how many liabilities, how much equity they have. Managerial accounting is much more concerned with, the cost of running operations at a company. They are much more concerned with managing those costs and helping a company reach the best economies to scale that it could possibly reach, making the production process as efficient as it could possibly be, and at the end of the day, making as much money as they possibly can. Which is easy to understand. So there are two main types of costs: direct costs, which are any cost directly related to the production of a product, and indirect costs, which are indirectly related to the production of a product. So an example of an indirect cost would be the heating in the factory where the product is made. Meanwhile, a direct cost would be the cost of labor for making that product in the factory where that's being heated. So there are three categories of cost. There are fixed costs, which are fixed. You pay $500 a month in rent over the portion of your lease. That amount's not going to change. So that $500 is a fixed amount. Variable costs, which are related to some sort of activity or volume of activity produced. And so an example of that would be direct labor. You pay your workers $15 an hour. They work for 5 hours. They make $75. Bada bing, bada boom, nice and easy. The third category would be mixed costs, which are the easiest to understand. They're simply a mixture of fixed costs and variable costs. So they have a fixed element to them and they have a variable element. You combine them, it's a mixture. It works. There are two main types of drivers and a third one that is kind of related but not. There's direct material and direct labor, and third related would be overhead, managerial overhead, more specifically. And these are labels for types of costs that will travel through a company's production process. So when you make a product, there are very simple steps, and managerial accountants track expenses through these steps in very particular ways. And there are different ways that we'll get into a little bit later that suit different companies better. There are advantages to both kinds. The main trade-off would be time for accuracy. Some are easier to use and take less time, but they're not as accurate as the more time-consuming options. So I drew a little picture to help you better understand the flow of information that managerial accountants are concerned with here. I don't want to block my head. Maybe I'll start over here and switch sides. But so over here we have the direct materials costs, which go into raw materials. Now each of these accounts, these are T accounts. I know you've never taken accounting before, so let me explain that to you. They analyze costs. So the beginning balance would be the cost of any raw materials produced in previous periods, ones that you enter the fiscal year with. Then you're going to make any purchase of any direct materials, and they will add to your raw materials account. Now, eventually you're going to say, I need to use these raw materials to make some products. So when you use a certain amount of raw materials and you move them into production, that's called a requisition. So a requisition is simply just any materials that are going to be used to produce a product. And those get moved into what we call an account called work in process. Now, work in process is this handy-dandy little thing where you process a good. So other costs included in work in process are direct labor, which is right up here, nice and easy for you, and any factory overhead, the heating of the factory, like I said before. or possibly the manager's salary of that factory, a accountant's salary because it has to be pushed down. But that's in we'll assign those later. And so where was I? All right, so factory overhead, and then all of that. Once a good is produced, it is cost of goods completed. Now I'm going to switch sides really quick. And once you have a completed good, it goes into finished goods. Or, on a balance sheet, it might be ending inventory for a company. And what happens with ending inventory? Well, eventually it is sold if a company is doing a good job. And it becomes cost of goods sold. Us managerial accountants, we love cost of goods sold because it means we made a sale and we made some money. Now, as I was getting at earlier, there are 3 ways that you can assign cost. There might be more, but when I was learning it, we learned 3 specific ways, or at least we touched on 3 specific ones on your slide. Job costing is the most simple. It's simply just, we did this job, this is how much it cost. It pretty much is encompassed in this very basic drawing that I had for you, by price. Now, there are other ways. Another one would be called process costing, and if you are a factory that, or if you're a company or a manufacturing company that has a lot of different departments that add into one product, process costing might be good for you to use. You get to use these really fun things called equivalent units. They're really fun to calculate. Basically, they are the amount of goods that could be produced given the incurred cost, and they're separated directly for direct materials, direct labor, and factory overhead, and then they're all added together at the end to see if you produced what you should have been able to produce. So for raw materials, if you add all the costs for your raw materials in the beginning of the process, then equivalent units will always equal produced units because you've added all their costs. You've produced the amount you should have produced. But if you're using labor, evenly through the process, then you're, evenly distributed throughout the process, then there might be a point where your units produced haven't quite yet hit your expected amount, because labor's been inefficient, and so your equivalent units would be lower than your actual unit, would be higher than your actual units produced, which would not be good. That would show some sort of variance in your workers. You might need new workers. So the third type, and the most complicated type, you briefly touched on that we wouldn't want to do this in class. It's activity-based costing, and it's known as ABC for short, which is really misleading because you think ABC, 1, 2, 3, nice and easy, but it is not nice and easy. There are 6 main steps to ABC costing. They are to, give me 1 second to pull out this list. Identify the cost object. Identify the activities in the process. Accumulate cost by activity. Identify the primary cost driver for each activity. Determine a cost per cost driver. And then charge the products based on the amount of cost driver each product used. So what the heck does that mean? Basically, if I can remember the notes that I took about 2 years ago, 3 years ago correctly, you make a product and you separate each product into what goes into it. So if I'm making hamburgers and I sell hamburgers, what do I need to put on them? It's just, we're going to make this as simple as possible. We have a hamburger and we have a bun. So those are the cost objects. Now, what do I do to, how much does each cost? Well, if I don't take a cow and turn it into a patty myself, I have to buy hamburgers. If I don't make a hamburger bun myself, I have to buy hamburger buns. Those are cost objects. Those are the activities in this process, or simply making the hamburger. So what do? I gotta take the patty, I gotta put it on the grill, I gotta flip it once or twice, and then I gotta put it on the bun, and I gotta sell that stuff. So each of those activities has cost drivers. For the bun, the cost driver is simply the materials, because that's how much, all I need to do for the bun is buy it. But for the hamburger, it's materials. How much does the hamburger cost me to buy, and how much does it cost for the guy to cook the hamburger? So there's 2 different cost drivers, material and labor. For a manufacturing company, it might be a little different. They might just be buying materials, and that's how much it costs for that. And then the next activity would be producing them. Having a guy crank some sort of machine, And that's it can get obviously a little bit more complicated than my simple example. But ideally, you find those cost drivers. For each activity, you assume a cost driver a cost per cost driver, and then you just multiply each by the amount of activities that you have. Sorry if that didn't make sense. I did my best there. Like I said, I took this 2 years ago. Anyway, so the idea here is that managerial accounting really gives companies an idea of how efficiently they're performing. I believe that it is an extremely important function of accountants' jobs that they can bring to the table for companies. And I believe personally that it's a little bit more interesting than the financial side of accounting, but everybody's got their preferences. I know that there are many types of certifications you can go for, if you would like to become a managerial accountant. One of them, your CMA, Certified Managerial Accountant. It's similar but easier than the CPA test. I think that you have to be a CPA to get it, but I'm not entirely sure. But it's something that I plan on getting after my CPA, because one day I hope to be more than just an accountant. I hope to be a manager. I just wanted to say that, this was fun to do. I liked going through my notes for my old managerial accounting book. That was really fun. So, thanks for that opportunity. And, I'll see you in class on Thursday. All right. Thanks, Press Use. Have a good one.